Thank you. And thanks everyone for being here today. I'm really delighted to be hosting this discussion about challenger banks and what the UK government and regulation can be doing to support these banks, and in some cases, how can we remove the frictions that exist already. It's hard to believe that the first wave of challenger banks came around 15 years ago now, and since then the UK has really positioned itself as a UK leader in financial institutions, financial services, and fintechs more generally. But what we're going to discuss today is whether regulation has kept pace with that rapid growth of the challenger bank sector, and what more we could do to support those starting up and scaling. I am thrilled to be joined by no less than 3 challenger banks, as well as an industry body and a compliance organisation. So we really are getting the full spectrum of perspectives on this panel. And because there is an awful lot to cover, I think I'll just jump in. So we'll start with, I guess, the challenger banks themselves. So we have Angela from ClearBank, we have David from Griffin, and we have Neil from Tandem. For you three, so as I say, we've been in the challenger bank era for about 15 years now. How successful do you think the UK has been at supporting those banks, and do you think we've got the right balance between helping them start up and then helping them scale up? Neil, do you want to jump in?
Hi. Look, you judge by outcomes, don't you, I guess, ultimately. We've got a hell of a lot of challenger banks. You know, we've got some that are now almost behemoths in their own right, you know, with the news about potential IPO and things like that, you know, from a Revolut perspective, not founded in the UK, obviously. But so I think we have an environment that is perceived as being a very strong environment for challenger banks to grow. That would be the first thing I'd say. I think the second thing I would say is, you know, regulation by its very nature tends to be reactive. I think it's quite hard to get out in front of these things. I think that's true of any regulated environment. But actually, and I've been the CEO of various banks for quite a long time, and hey, look, I'm sat here in a suit, so I might not look quite like Challenger. Maybe I'm the second iteration of Challenger. You know, not wearing my trainers, very comfortable too, but not. Sorry about that. But actually, my view is that the UK is a great environment, you know, for that. I think regulation, the last thing I would say is from a regulatory perspective, people will say, you know, the regulators are too hard on us, et cetera, et cetera. Actually, largely, I don't agree with that statement. I think the regulators are trying to do a really good job, and I'm not just doing that because I want a job in the regulator next. That's not why I'm saying it. The key thing I would point to for a bank as opposed to a lender is the capital requirements on mid-sized banks need to be looked at. That's the one bit of key regulation. So in essence, you need reg capital to be able to grow a bank. You need capital to invest and make changes in technology, etc. And actually, it's hard to generate that level of capital quickly enough when you're below a certain scale. You know, when you're a Lloyd's or a HSBC, you're such a behemoth, you're throwing off so much profit, you're generating a huge amount of capital. And so there's a disconnect between small and big. And actually, that's a chasm that probably needs to be turned into something slightly smaller. That would be my view.
Great, thank you. Overall, a fairly positive news story. David, do you have anything to add?
Yeah, I mean, I think broadly I would agree with that, right? I think like the challenger banking story in the UK is a tremendous success story. You have a number of market entrants over the last sort of decade and a half that have achieved serious market penetration where, you know, their customer bases are maturing. That's like a weird euphemism for like getting older and therefore having more money and therefore being more lucrative. And so, you know, a number of these banks are moving into like more serious stages of profitability, which is of course like the kind of ideal end state from a regulatory perspective. Like if you want to make sure that you don't have risks to the financial system, you want your banks to all be profitable. You want them all to be sort of healthy, sustainable, durable organizations. But I absolutely agree with what Neil was saying. I think, you know, there's amazing regulatory support to enable newer, you know, more technology-driven, maybe even business model innovative challenger banks to enter the market. But there is still, you know, these are scale businesses, right? Banks have very high fixed costs. And when you are small or even medium-sized, those can really still be quite punishing because you just have to reach a certain level of scale for them to start to work in your favor. I think it's been great to see the regulatory direction under the current sort of Bank of England and FCA looking at proportionality in a number of different areas and like There's a ton of work that's ongoing. There's some work that's already been rolled out. I think there's a lot of work still to go in terms of really thinking about the sort of regulatory landscape from a proportional perspective of, to some extent, almost companies' ability to pay, right? And increasing the ability of small banks and mid-sized banks to be viable without needing to reach that critical level of scale if you want to have a richer and more competitive landscape.
Thanks. Angela?
I agree. So I do agree with Neil and David wholeheartedly. I think the last 15 years have been really productive. And one thing that Neil said that I want to pick up on, which is the role that the regulators have played in the success of of fintech over the last 15 years. I think the FCA sandbox has done an amazing job to bring the fintech ecosystem together to allow testing and validation of innovative propositions in a safe and controlled way. So I think that partnership between industry and the regulators over the last 15 years has been part of the success story. I do agree with both that there's still work to do on the proportionality. I think the way that the capital requirements apply to firms from startup to scale up is still a challenge. And so even after you've made the journey and created a successful business such as ClearBank. So for those who don't know ClearBank, we're a payments and clearing firm which digital asset capability and ambition to be global. And even for a firm like ClearBank with this long journey, we're 10 years, celebrating 10 years this year. We're still at that scale up needing proportionality in the way that the liquidity rules are applied, and you can't apply, or we would say that the application of ICAP to a startup and a scale-up should look different from the way that it's applied to incumbents. So there's still a lot of work to do, but I'm really positive about it because I think that the level of engagement from the regulator is good. We have a scale-up unit now where, again, the environment is there to test and educate the regulator in a really productive environment.
Great, thank you. Really good to hear from the horse's mouths, and it sounds like generally a positive message, which is great. Turning to a slightly different perspective, so Joe, at Adclear, you must see a whole range of different financial institutions, the incumbents, the challenger banks, non-bank financial institutions, and presumably non-financial institutions as well. How much do you think an organization and a challenger bank's growth is linked to how they communicate with their customer base? And do you think the massive amount of regulation in that area is holding some of those banks back?
It's a really complex question. I think it's a good question. I think what we see is the classic incumbent versus startup or new entrant play, in the sense that new entrants can be quicker at how they deliver their communications. There's new channels they can explore that maybe legacy banks can't in that sense. It's the same level of regulation and compliance, but they can take a few more risks. So we see that in their communications, in their internal policies, and often there's less loopholes or bureaucratic processes they have to go through to get an innovative campaign or communication out to their customer base, which means they can attract different types of users and deliver different types of products to those users. So we certainly see it across the spectrum that the younger fintechs have a different way of approaching Gen Z, for example, versus the more traditional banks who have to get multiple levels of approval and longer approval processes. Obviously, technology can help with that, and the way they use the technology is actually, from our perspective, from an approval system, the same with AI, but there's just more need for it potentially at the larger places where there's more back and forth and additional approvals that have to happen before something can go live.
Great, thank you. And thinking about the challenger bank sector and what it serves at the moment, I think it's getting increasingly popular and kind of good at serving some of those corners of the market that incumbents have traditionally not fully served. And one of those is SMEs. I think I read some stats recently that SME lending was up a lot with the challenger banks. I think 60% of all bank lending was with challenger banks. So Paul, from your perspective at the FSB, how do you think your members benefit from kind of new and innovative lending products and other banking products being produced by challengers?
Sure. So, I mean, competition is obviously a really good thing. And I think to the extent that challenger banks can play an important role in addressing the pain points that small business owners encounter when applying for finance, then I think that that can be really valuable. And based on the evidence that we gather, we know that some of the, key frustrations that people feel when applying for finance, too long application process, the whole thing just takes too long. Lots of applications, left pending when we get our survey results back. Being unable to speak to someone if they run into a problem with the application, or perhaps the application requiring info that they don't have. So to the extent that these really quite practical things actually can be addressed by challenger banks, I think it can be really helpful. And it's also worth reflecting that according to the evidence that we gather at the Federation of Small Businesses, only around 50 to 60% of finance applications actually get approved. So challenger banks can play a really important role in terms of picking up those that aren't getting approved at the moment. So I think if they can attack these pain points, it's very good for SMEs.
And if challenger banks were more able to lend more, I guess, to SMEs and widen that capital pool, what do you think SMEs could kind of do with that, and how would it benefit that community?
So investment intentions are really weak at the moment, and part of that is the cost pressures that small businesses are facing, and obviously making more external finance available can only be a good thing for improving those investment intentions. But I would say there are other issues that need to be addressed at the same time. It's not just about making more money available. Some small business owners remain incredibly reluctant to borrow in order to invest in their own growth, particularly if they have to put their own personal assets on the line. So I think there's an issue to look at there. And again, to the extent that challenger banks can differentiate themselves maybe in the way that they approach things like personal guarantees, that would be a good thing. And also, there's 5.7 million small business owners and SME owners out there. It's an incredibly diverse community, and some of them have really not been served very well by the banking sector and have fairly low trust. So what about those people who found themselves unable to easily set up a bank account? Again, are the challengers competing well for those potential customers as well as the customers who are already being served well? So yeah, there's obviously lots of opportunity if we can get more small businesses borrowing to invest. They can invest in their productivity, they can invest in being more energy efficient. That's all good for the economy, but I think we've got to look at these other barriers at the same time.
Thanks, Paul. So I guess in contrast to SMEs, arguably the consumer space is one that is quite well served by incumbents, and it is a fairly crowded market. At the start, there were some comments about, what is a challenger bank now, because some of those original challengers are now bigger than normal banks. Neil, so you're at Tandem Bank, which is consumer facing. Challengers used to distinguish themselves by having kind of whizzy apps and real-time notifications and really good user experience, but a lot of the incumbents are catching up with that now. What do you think now distinguishes challengers from incumbents, and where do you think the next opportunity for challengers is?
Yeah, shock horror. Digitization don't differentiate anymore. It doesn't. I mean, there's still some catch up, right? 2-3 years. There are some executional things where some things are better. You look at like a Revolut. They went down a very simple route and they just absolutely nailed it. And then they incrementally added things on. The differentiator, as far as I'm concerned, and look, Tandem has a green aspect, a sustainability aspect, and it's one that we're going to build out, ever more strongly. We financed nearly £1 billion worth of solar panels in the last few years, as an example. So where the differentiation comes from, in my mind, we talked about S&P as one, and these guys will talk about, the points of difference in their banks. It's about understanding a specific consumer need and delivering against that need. And I've been in banking a long time. You can tell from the grey hair. The issue I have with the banking industry is it's pretty arrogant. It's product-led and it's profit-led. It doesn't actually really understand customer centricity and customer need as much as it says it should do. And the point about challenger banks is they're challenging the fact that we are financial services. We are a service industry. We are here to provide a service. People don't want a BNPL, they want the jeans. They don't want a loan, they want the car. They don't want a mortgage, they want the house. So actually, the real differentiation I think you see in challenger banks, and Tandem happens to do it with this sustainability angle, is you see a genuine customer need and you align the entirety of your business around delivering to that need as best you can. Now, digitization plays a part in that, but it's not an end unto itself. It's an enabler for meeting that need in the way that the consumer wants to meet it. That, for me, is what defines challenger banks now. You know, it is absolutely about just going, we're going to go and nail this one proposition, and we're going to do it better than everyone else, and consumers will vote with their feet, because if they have that need, they'll say that bank does that better than the big behemoths.
And I suppose in the consumer space, I spend a lot of time advising consumer-facing financial institutions, so I'm very aware of the absolutely enormous compliance burden there is there. Anytime you bring consumers in, it just mushrooms. And of course, that's good for it's all for good reason. It's important to protect consumers. It's important to ingrain trust, etc. Do you think the current regime is appropriate for challenger banks as well, or do you think there should be a sort of more proportionate regime that applies to some types of institution?
It's interesting, right? I come from quite a modest route, so you know my folks needed to access lending more than savings. They needed protection, right? They weren't experts in FS, but also I think so we're a bank, so we hold customers' money, so we've got 2 billion of customers' money on deposit. I have the privilege of running that bank for a while. But if I ever forget that is each of these people out here, mine, other people's, that's what's going to get them through life. Those savings are what's going to help them in the next 2 or 3 months, get the kids through school, get the kids to university, whatever it is, fund a deposit on a house. It is incredibly important. And it is the most important thing and the biggest responsibility I think we as banks have, is to protect that consumer's money. We're privileged that they give it to us, not give it to someone else. And so I don't hold with the argument that says consumer-based regulation has gone too far or is too hard. I just don't. It's there for a reason. It's there to protect people. Financial services and banking is complex. The most difficult things you make your decision on in life, taking a mortgage out, is a complex process. It's not a terribly complicated product, but it's very, very emotional. And it's the biggest thing any of us do financially in our entire lives. The people who provide that should absolutely be held to a very high standard. So, and I think David nailed it, right? The challenge with challenger banks is because of that weight of regulation, which, by the way, is largely appropriate, as I've just said. But the problem is it comes with a high cost. We can use digitization, we can use AI, we can use, sort of all of those new things to try to change that cost-income ratio, but by its very nature, you can't go below a certain level. Otherwise, you are going to do something wrong from a compliance perspective. So from a compliance point of view and a conduct point of view, no, I don't think the regulatory environment is wrong. And actually, I'm proud to be, running a bank in the UK, because I think that aspect largely is pretty much bang on, and the focus on outcomes is the right thing. I've talked about other aspects of regulation, like the capital piece. I do think that needs to be looked at, because that is that's an inhibitor. It's a disabler for organisations of our kind of scale, rather than the hundreds of billions balance sheet type scale, that doesn't allow us to grow as fast as we can do. And therefore, it's not about making money as a bank. Therefore, not meet that need that we have. I've talked about that particular customer need as well as we would like to, or as completely as we would like to. So I guess to summarise, I think the consumer regulation largely is entirely appropriate. The FCA don't get it always right, of course they don't. They're human, but actually largely I'm very supportive of that. I think some of the prudential stuff can be changed for the smaller banks.
I have a hot take in response to that. This is maybe going to get me in trouble later, but I think so. I would agree in large part, and this isn't about consumers per se, but I do think that the current fraud regulation is sort of a fraud reimbursement regulation is like I would describe it as a social failure, right? Like essentially, if you think abstractly about pots of money, here's a pot of money that belongs to the police, here's a pot of money that belongs to fraudsters, here's a pot of money that belongs to everybody else, and here's a pot of money that belongs to the banks. What we've done has been to say, let's set up a channel by which money moves from banks to fraudsters, right? And yes, maybe a little bit back to the rest of us, and like none of the actual underlying fraud is being addressed, right? And so like fraud is now our like single biggest crime in this country. And rather than collectively saying, shit, we probably need to put a bunch more money into police and enforcement and anti-fraud activity, we're like, actually, like, we don't have the political willingness in this country to pay higher taxes and give that to the police so that this gets addressed. So instead, we're going to deal with a second order effect, which is to just take money out of banks and reimburse them when fraudsters are successful. Like, that's a total disaster. It's a total social failing. So that's my one place where I have like a very, very strong opinion. But critically, I would say like not the fault of the regulators, right? Like this isn't like the regulators can't solve that problem in isolation. They're reacting to the like larger political failing that has happened in this country.
It will also be interesting to see where AI takes that with agentic payments and things, whether it continues to be a social failure, as you called it. But anyway, so turning to the sort of infrastructure layer, because that is often where some frictions exist which are potentially hidden or not appreciated by the end user. We have banks like ClearBank and Griffin, which are a sort of wave of banking as a service type models that offer access to payments and clearing infrastructure that allows kind of other institutions to have access to those systems that may have been more difficult before. Angela, can you tell us whether you think the UK is supporting those types of models enough, and how do you think they can perhaps smooth some of the frictions that we discussed earlier that Paul was talking about with the small businesses?
I think more needs to be done, right? So we're at the phase where, as we're talking about on this panel, it's been 15 years, what next? And I think the focus on the infrastructure and whether the infrastructure with the development of AI, to your point, does support the real world problem of can I make a cross-border payment, and can I make that cross-border payment in a way that I, as a consumer, would like to? And is there a framework that facilitates that? I don't think we're there yet. And so the idea of what does the UK system need to look like to accommodate digital assets, stablecoin, and provide the flexibility to move in and out of fiat in a free way? I think that's still a challenge, and that's something that we'll have to go back to the regulator, because it's not just an industry solution. This is our challenge. What is next? When you ask what's next, that is next, and it's coming together to collaborate on interoperability, on cross-border payments, on globalization. That's what we're facing, and I think there are opportunities clearly with AI to advance those infrastructure challenges, but not something that any institution can do on its own.
Could I just say one thing on air? Here's my challenge with AI right now in the deployment is banks and financial services have deployed it in operational efficiency use cases. That's not where the power is. The power of AI and ingestion of data should be deployed in meeting that customer need even better than it is right now. And ingesting all the data about that customer and getting a better answer for customer in an easier way. I think that's the challenge with the infrastructure. And actually, to your point, the use case of things like fraud absolutely is something that is suboptimal. I'm politer than you. The suboptimal, but needs to be fixed. But I think that's the challenge with AI. At the moment, it's all about it's basically doing old world stuff. It's doing business process re-engineering, but just AI'd. And that's not where the power and the value of AI should come from, I don't think.
I'll just jump in there and slightly have a different view on that. Yeah, exactly. I think the initial use cases we're seeing with AI are with operational efficiencies, but I think there's a level of trust that has to develop between this technology and especially larger banks. And I think once that trust is developed, then we'll start to see the more powerful agentic, more deeply embedded use cases that we want to see. But I just think it takes a bit of time, and actually I think the regulator and the way the market is going is in the right direction, but it's maybe a bit slower than we would like as innovators.
Conscious of time, so final question, I think. So David, do you have any views on whether the UK is supporting the sort of ClearBank, Griffin type model, sort of banking as a service type bank? And have you seen any examples elsewhere in the world that are either that we could learn from or that perhaps we should avoid going towards?
I mean, I think, look, as far as I'm aware, ClearBank and Griffin are quite unique businesses. You have a bunch of businesses in other countries that look like us from the outside, but they're generally retrofits, i.e. it's someone coming into an established traditional business and bolting on like more kind of clearing banking as a service model afterwards. And that can be really challenging because you have conflicts between the sort of legacy business and the new business. In terms of regulatory support, domestic support for our quite unique business models, I think we are given a appropriate level of scrutiny, is what I would say. It is a quite challenging business model to run with some very unique risks that are very different from a normal bank. I think the regulators are very sophisticated in how they think about that, and that is fortunate. It is an incredibly expensive type of bank to get off the ground. All banks are expensive to get off the ground, but they're mostly expensive in terms of capital requirements, i.e. you kind of just have to get to scale and use your capital to get a sufficient loan book out. And once you've got the loan book big enough, you're kind of guaranteed to work, as long as you haven't messed up on the credit side. For us, on the infrastructure side, the infrastructure is immensely expensive and very time-consuming to build. I do think that there are improvements that can be made here, but I don't have kind of quick and pithy answers on how to do that. It's just actually really hard. And there is a reason why there aren't a lot of businesses that look like the two of us. It's really, really a tough market to get into.
Great. Well, I think we're out of time now. But thank you so much to my panel. That was a really, really interesting discussion. And thanks for joining us.